In my last discussion last night, I focused on almost all the concept concepts to be followed meticulously and conventions of double entry bookkeeping or financial accounting to make the stream more meaningful. After going through all these concepts and conventions, now we have to learn the first set of accounting book, that is called journal. And when we talk about journal, people almost think they should know what is to be debited and what is to be credited, or what is debit and what is credit. During our graduation and also during our post graduation also, many students I have seen, those who are not clear idea about debit and credit, because the meaning of debit and credit is not static, it is dynamic by nature. So when we have to think of journal, definitely we should know that what is to be debited and what is to be credited. But exactly, as far as financial accounting is concerned, as far as double entry bookkeeping is concerned, usually those who have mooted the idea of keeping the accounts in proximity with both the aspects of a transaction, they had given or they had formulated two types of accounts considering the nature of the transactions. Number one is personal and number two is impersonal. What is personal account? When the transaction is related to person or institutions or company at large or an organization, it is called personal. If it is related to person directly, it is personal account, and if it is an organization, then it is called representative personal account. It is also coming under the same category. Suppose you are being a businessman, you are keeping your accounts with certain bank, and that bank is also to be treated as a personal account, because that banking organization is also representing personal account. So almost all the people, if we have kept the name in our transaction statement, then automatically it is coming under the personal account. And number two is impersonal account. And again, impersonal account has been divided into two categories. One is real and another one is nominal. The real account consists of almost all the tangible things. You may say plant, machinery, all assets, goods, purchase of goods. All the tangible things are coming under the category of real account. And remaining nominal account, we may say the accounts which cannot be treated as neither personal account nor real account is coming under nominal account, coming under the category of nominal account. And what is the example? You may say your profit or loss, you cannot treat the same as personal account nor real account, so it should be treated as a nominal account. Likewise, discount availed or discount given to discount allowed to others or customers, it may be treated as a nominal account. So in total, we have three categories or three types of accounts. One is personal account, number two is real account, number three is nominal account. Initially it was divided into two categories, personal and impersonal. Again, impersonal account have been divided into two categories, that is real and nominal. So ultimately we are getting three types of accounts, and categories of accounts are linked with personal account is related to person or representative personal. Real account is related to all tangible things, and nominal account related to all the types of accounts or type of entities which cannot be categorized neither as a real account nor as a personal account. And when we are keeping the accounts or keeping the record from transaction statement to our journal book, the prime set of double entry bookkeeping is called journal. That is the first set of accounts also. When we are transferring the information from transaction statement to our journal book, we should know that some debit formulas and credit formulas are there. What are they? In case of personal account, debit is always the receiver. Debit is the receiver, credit is the giver. For example, suppose I purchased goods worth rupees 800 from Ram. That is a transaction statement. That is written in transaction statement. Purchased goods worth rupees 800 from Ram. That is to be recorded in our journal book. How to journalize? Receiver, in this case, I myself is the receiver and the giver is Ram. But what again we have to think of in this transaction statement or in this transaction, one thing is purchase goods, another entity is Ram, and again 800 rupees cash is also involved. But when a name is written in the transaction statement, it is to be taken it granted that the goods purchased is on credit. I being a purchaser, when I should definitely keep the name of a name in my book, then definitely I should have purchased the goods on credit. And in the same case also, Ram is also a businessman from whom I have purchased the goods, and he should also kept my name in his book, on which basis I being a creditor, a debtor, he should definitely keep my name in his books. So in this transaction, again we have to think of the formula of, as goods purchased is real account and Ram is personal account, definitely we should know also the formula of your real account. In case of real account, what is to be debited? What comes into the business is to be debited, and what goes out from the business is to be credited. In case of real account. So in the transaction statement, what I told you, that I purchased goods worth rupees 800 from Ram. In this case, purchase account is to be debited or goods account is to be debited to Ram account. And in case of purchase account, the amount column should be entered with 800, and when Ram is to be credited in my books, in my journal, in the column of amount also, again 800 is to be entered in the amount column. And in case of nominal account, what is the formula of debit and credit? Debit expenses and losses, credit incomes and gains. When the business incur any expenditure, that is to be debited, and when the business is earning certain profit, that is to be credited, or any gains in the form of commission, in the form of discount, whatever may be. In case of nominal account, debit expenses and losses, what expenses incurred for the sake of business are to be debited, and losses even are to be debited. And in case of gains or any benefit from outside, it is to be credited. So when I have purchased, in case of my example, I have purchased goods worth rupees 800 from Ram, that was written in the transaction statement, and I have transferred the information from transaction statement book to our journal book. So in my first entry in my journal, I wrote purchase account debited to Ram account, and in case of purchase 800 rupees is written, and in case of Ram also in the credit side, that is to be written, that same amount 800 is to be credited in the amount column. After writing down all these things, again in parenthesis, means in bracket, a short note of the transaction is to be given. Within parenthesis or within bracket, we should write down, after journalizing or after passing the journal entry, we should write a short narration, that is called narration. What is to be written? Since purchase of goods on credit, bracket ends. Bracket starts from since and bracket ends on credit. Or those who are matured accountant, those who have done practical, in case of practical accountant, being purchased, that's enough. A veteran accountant can make out it that the goods have been purchased from Ram on credit, for which his name has been entered in the journal book. So again, in the journal book, the date of the transaction is to be written. Suppose today is 12th May. So 12th May is to be written in the left side of the journal. Again, then the particulars, then your debit amount and credit amount. Within debit amount and credit amount and the particulars, there is another column should be there as ledger folio to get a reference of ledger. When the information will be transferred to ledger from journal book, that is the page number of the ledger is to be written in the journal book. So for that, L by F means ledger folio column should also be there. So how many columns are there? First column is date column, next column is particulars, next column is ledger folio, next column is debit column, next column is credit column, credit amount. And after entering the debit and credit figure, we should definitely give a narration. Suppose on 12th May 2020, I am going to make the payment to Ram, and when I inquired to Ram what amount I should give, he may say that instead of 800 rupees, you may give 780 rupees. And it is implied that in discount, he is intended to give me 20 rupees discount. You know, in these days, credit is a common phenomenon in today's market. Almost all the businessmen, what to speak of businessmen, even bankers are also suffering that problem. So credit is a common phenomenon for which almost all the businessmen keeps a practice of giving discount to their loyal customers. And when I am making the payment, that is also to be placed in my transaction statement. And what I should write? Now paid Ram towards his settlement of rupees 780. I purchased the goods for rupees 800, but when I make payment to Ram, he allowed me a discount of rupees 20. And transaction statement says paid Ram 780 in full settlement or in settlement of his debt. So that is also to be journalized in my books, in my journal book. So how to get the same? Entered in my journal book. Transaction statement says cash is also real account and Ram is personal account. Ram is the receiver of the amount and cash of 780 rupees is going out. So What goes out is to be credited in case of real account. But now question arises, when cash is given to Ram, Ram is the receiver. So Ram account is to be debited and cash is to be credited. Ram account debited to cash account. To cash, when I am saying to cash account, then the exact amount what I am giving, 780, is to be written in the written against cash. Again, another second entry would also be there in case of credit to discount account 20. It would have been more realistic if I elaborate the same or showing the same. If I am in a position to show the same on the blackboard or on the glowing board, it would have been easier to visualize. But the same thing you should try to grasp. Ram account is to be debited 800 rupees. Then in the credit we should write down to cash 780 and to discount 20. So in credit column, credit amount column, 780 and 20 is total is 800 and Ram is 800. Here you should follow both nominal account and personal account and real account. In the second entry, when I am paying the cash of 780 rupees to Ram for settlement of his debts, our debt, it is written that Ram account is credited. Previously in my previous journal, it was Ram was credited and now Ram is debited. We should definitely remember it. For every debit there is a corresponding credit and for every credit there is a corresponding debit. Some scholars of accountancy says that double aspect concept is also based on it. If debit is there, definitely one credit is there in our transaction. If credit is there, automatically some debit is also there. That is also one existence of dual aspect concept of double entry bookkeeping or financial accounting. When we are passing one debit and one credit, it is called simple journal. In case of my first journal, in my example, that was a simple journal. But when I am paying the amount of rupees 780 rupees, and I am availing a discount of 20 rupees, that called for a compound journal. When more than one entry is there in debit, either debit or in credit, that is defined as compound journal. In this way, we should transfer almost all the informations which are there in our transaction statement to our first set of bookkeeping, that is called journal. Now the question arises, in these days, almost all the businessmen, irrespective of their standard, irrespective of their size, irrespective of their characteristics, it is the common objective of almost all the businessmen to increase the volume of the business. So automatically, if we try to increase the volume of the business, automatically our transaction volume will also increase. If the transaction volume will also increase, our journal volume will also increase. So automatically, it should be our motto or objective to decrease the volume of journal. How that can be declined or how that can be reduced? With the help of some subsidiary books. Apart from journal, we may have certain subsidiary books. What are they? Now, when we are following all the transactions of a business, most often we see many a times we are purchasing, many a times we are selling, many a times we are giving expenditure for goods being transported to outside, and goods are being brought to inside to the business. So the nature of transaction is very often we are doing, or most often we are doing. So instead of passing the same transaction statement in our journal, we may keep separate subsidiary book for the purchases and for the sales and for what? Carriage inward and carriage outward. What is carriage outward? Means sometimes for the sake of our business, after selling the products, we may give facility to the customers to give transport charges of our product to the customer's house. That is called carriage outward. And sometimes when we are purchasing the goods from our supplier, we are also to spend certain amount of money towards that, and that is called carriage inward. That expenditure or that heads of account, that title of the account should be treated as, when we are paying for our customer, that is carriage outward, and when we are purchasing the products and we are bringing the goods to our own godown or to our own outlet, that is to be treated as a carriage inward. So purchase register should be there, sales register should be there, carriage inward register should be there, carriage outward register should be also there. Apart from these four, more two registers also be there, because we would have observed sometimes almost all the purchases or almost all the sales are not confirmed sales, or almost all the purchases are not confirmed purchases, because due to some anomaly or due to some faults or due to some irregularities or peculiarities of the product or the price factor, we may give return to the supplier which we would have purchased earlier. Likewise, our customer also may also give back the products to us. So when in case of purchase goods, when we are giving back to our supplier, that is called purchase return. And when we allowed our customer to give back our products what the customer had purchased earlier, that is called sales return. So purchase return contain all the information regarding the goods which has been given back to our suppliers, and sales register contains almost all the information regarding the sales which have been affected earlier, have not been confirmed, out of which maybe part of the sales may come back to us from our customer. So all these informations to be recorded in the sales return. Another is purchase return. So how many subsidiary books are there? 6 types. Number 1 is purchase book. Number 2 is sales book. Number 3 is carriage inward book. Number 4 is carriage outward book. Again, number 5 is purchase return. Number 6 is sales return. So definitely, if we are converting some transactions to be recorded in these 6 subsidiary books, automatically the volume of journal will decrease, and that should also be the motto of the accountant. Because if we give more time to accounts, then automatically the original purpose of the business may be defied, because sometimes the businessman and the accountant may be the same person. Initially it happens like that. Again, question arises, when we purchase on cash, and it is the sole intention of our all suppliers that to purchase the products on cash, giving cash, suppose we are purchasing, that transaction statement should not be there in our purchase book or purchase register. Likewise, when we sell the product in case, then that should not be recorded in sales book. Only the credit purchases should be recorded in the purchase register. Likewise, the credit sales are to be recorded in the sales register. Again, now question arises, if we purchase goods in cash, then how the transactions are to be recorded, the cash transactions, and in case of purchases, that is to be recorded in our cash book. That is a special book that is both journal of cash as well as ledger of cash, means classification work is also being done through cash book. So in case of cash sales, in case of cash purchases, we may record the transaction in our special book that is called cash book. And you would have heard so many times in your practical life, in your day-to-day life, cash book. Even in the government offices, in the government department also cash book is maintained. But their cash book system and the businessman cash book system is something, has certain differences. Definitely later on or subsequently we will be discussing on it. But now we should keep in our mind that almost all the transactions can be recorded in our transaction statement. Again, almost all the transaction statements, information from transaction statement can also be transferred to our number one is journal book, journal entry, again, and purchase register, sales register, purchase return, sales return, carriage inward, carriage outward, and cash book. These are the prime books of our accounts, and almost all the transactions can be recorded. 6 plus 1 journal book, 1 cash, means 8 books are there in total, starting from journal book, cash book, purchase register, sales register, purchase return, sales return, carriage inward, and carriage outward. Almost all the transactions can be recorded in these 8 books. This is the recording, first set of recording concepts as far as financial accounting is concerned. Now question arises, if we know the personal account, real account, and nominal account and their formulas on the basis of which we are to debit and credit. Already I have elaborated. In case of personal account, debit is the receiver, credit is the giver. In case of real account, what comes in is to be debited, what goes out to be credited. And in case of nominal account, debit all expenses and losses, credit all incomes and gains. That is meant for the journal. And in case of purchase register, all credit purchases should be recorded. And in case of sales register, all credit sales are to be recorded. In case of purchase return, out of our total purchase, what we have returned to our supplier, that is to be recorded in our purchase return book. And in case of sales registered, out of total sale proceeds, the amount of sales which have also been returned by our customers to us, that is to be recorded in our sales return. And the expenses related to for the customers, that is to be carried outward. And when we are spending for our own, means to bring the products from our supplier to our own godown, that is to be recorded as carriage inward. And almost all the cash transactions are to be recorded in our cash book. When cash goes out, it is to be recorded. When cash comes in case of cash sales, that can also be recorded in our cash book. And considering the necessity and our activities, so many types of cash books are there. What are they? As a businessman, or it is not usually practice businessman, that is number one is single column cash book. Only cash should be reckoned in that cash book. That is called single column cash book. Again, double column cash book, cash column and discount column. triple column down, cash, cash, bank and discount. Cash column, bank column and discount column. Usually nowadays, as because we cannot run our business without the help of financial institutions, for various reasons, we have to definitely have a banker with us. So many so many financial institutions are there, and generally the businessman keeps the relation with nationalized banks, and you know how many nationalized banks are there in the societies, and according to our suitability, according to our location, according to our feasibility, so many things are there, and according to our rapport with the bankers, we may keep relation with our bankers, and accordingly we may do our transactions. And transactions with bank is very common. Number one, why it may also come to your mind, why we should keep our relation with bank? Because finance bank is the common custodian of our cash. With safety and security, we can keep our sale proceeds amount, or any payment what we have collected from outside. Instead of keeping our cash with us, we should keep the same in our bank, and at the same time we can have certain overdraft facilities if our rapport with the banks are good. So many facilities are there, and at the same time our authorities are also there, those who compel us, or those who those who have made certain rules to keep certain particular amount of cash with us, and the remaining should be there in the bank. So single column cash book, double column cash book and triple column cash book are to be maintained when we are influencing our cash or cash of the business. Another type of cash book is also maintained other than the cashier, other than the accountant, that is called petty cash book, or the person who keeps the accounts of that petty cash is called petty cashier. Most often you would have seen in your own household also. Sometimes suppose you are having certain amount of money with you, and suppose some guests are there in your house, and your mother can send you to market to have certain tiffin, and you have money with you. In that case, what you are telling to your mother? No mother, let me purchase it from the market. Later on, when the guest will be entertained, or when they will leave your place, then your mother can give back that money to you. Suppose you are spending on behalf of your mother for purchase of some tiffins for your guests, and you are again, that amount is being reimbursed by your mother. Likewise, in our business system also, we should definitely think of ourselves as a businessman. Maybe a petty businessman, maybe a big businessman, it doesn't matter. That is the beauty of this management subject, that is the beauty of this financial accounting system. No matter whether you are penniless or paisa less or money less or rupiah less, but you can keep the accounts of crores, and you can contemplate yourself as a big businessman like Bill Gates or something like that. So the petty cashier, another man, can be entrusted with certain advance money to maintain the small expenditure, petty expenditure, maybe to pay certain rickshaw puller, or auto wala, or for the cold drinks, or for tiffin, or for biscuits, or for tiffin. So many petty expenditures are also indispensable for the business houses. So it is not good to disturb the man cashier or to disturb the man accountant for the petty causes of the business houses or business purpose. So another man who is not related to cashier can be entrusted for that all, to meet all these petty expenditure with certain advance amount of money, that is called impressed cash. Supposing, considering the size of the business, we may give 500, we may give 1000 for a week, or 10,000 for a week. It is variable. It is no fixed formula is there. It varies organization to organization. Size of it depends upon the size and activities of the business and area of operation. So many things are there on the basis of which interest case is fixed, whether it is 500 or 1000, it is variable. Anyway, that case advance being given to the petty cashier, that man is called petty cashier, and the system is called impressed system, IMPREST, impressed system. And during your university examination or board examination also, the center superintendent also gets certain amount of money on the basis of impressed case, and the conducting authority, examination conducting authority also gives certain amount of money as impressed case to the center superintendent. And after completion of the examination, means after meeting all the petty expenditure as well as expenditure related to examination, he gives almost all the accounts to the controller of examinations or the authority of the examinations being conducted, and that is also being done in our financial institutions also. That system was there, and that is there till date. And in case of business organization, it is a very common phenomena, because if we disturb the man cashier or accountant very often for our petty expenditure, for our petty requirements, automatically the concentration will be at threat, and at the same time it is not good also for the gesture of the organization, for the report of the organization, for the goodwill of the organization. It is not good. So it is better to keep the report of the organization, goodwill of the organization. Goodwill means good name. Goodwill, that is a fictitious assets, that is a fictional assets, that has certain, like when you are going to a particular town and you are to have a lunch, definitely you are asking to the passerby even or a stranger, what is the where is a good lunch can be taken. Automatically, if you are coming to Baripada, automatically our people or the resident of Baripada will suggest you, without taking certain amount of money from you, or without taking certain amount of money from that particular hotel. Definitely they will be sending to you maybe Gorma Garam or Mahapatra Hotel or Grand Hotel. So many things are there, so many hotels are there. So it is why they are telling the same, or why they are suggesting, that means they are satisfied with the particular hotels when during their experience of having lunch, maybe in respect of quality, maybe in respect of taste, maybe in respect of what the price. So many things are there for which they are the loyal customers, and without taking a single benefits from that particular, they are also businessmen. The hotel people are also businessmen, so they have certain goodwill, and that goodwill is not tangible by nature, and that is also coming under the category of your nominal account. Okay, and that has also to be quality to be measured. It can be measured. How it can be measured? During the time of liquidation, or if one particular business organization or business entity is to be sold to another businessman, for the sake of goodwill, the businessman is intended to have certain additional amount of money apart from the original cost of the particular unit. Supposing one hotel is being sold at rupees 1 lakh, the sale value is cost of the hotel is 1 lakh, but apart from 1 lakh, towards the goodwill of the hotel, the original owner who is intending to sell the same may tax 1,50,000, and he may claim to the purchaser of the, or the possible prospect of the prospect buyer of the hotel, that I will take 1,50,000. How? Now rupees 1 lakh is towards the cost of the land and other infrastructure of the hotel, and remaining 50,000 is my goodwill, because what I have earned during my lifetime, during my during my activities at this place, I have earned that goodwill, and Overnight you can enjoy the same from tomorrow onwards. If you are purchasing the same, so towards that you are to give at amount of rupees 50,000. So in total you are to give 1,50,000. So that 50,000 is a goodwill, and that is also not to be taken as a real account, neither personal account nor real account. So it is to be treated as a nominal account. And tomorrow we will be discussing how classification of accounts are to be done after recording the transaction in the books of accounts of journal, in the subsidiary books as I have described: purchase register, sales register, purchase sales return register, carriage inward register, carriage outward register, and cash book. These are the 8 important books from which we have to carry forward, or we have to shift the information, we have to transfer the information to our ledger. Tomorrow we will be discussing. Thank you.